Hey everyone, Jeff Dorman, CIO at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about anything interesting happening in the crypto markets. And as always, we do a written version as well. You can catch it on our website, ar.ca/blog. And before we get started, of course, this is not investment advice. I am pleased to be joined by Elliot Chun, who is a partner at Architect Partners. Elliot, thanks for joining me today.
Jeff, pleasure. Arca, you guys have been doing it really, really right since the beginning. You guys have been leaders in our industry. That's our two Satoshis. I mean, come on, you guys are one of the original casts. So it's a pleasure to be on, and a longtime listener and a first-time participant. So looking forward to this.
Well, I appreciate that. So why don't you tell some of the viewers a little bit about what you guys are working on over at Architect Partners? And I think it's a good week for it because, as I wrote about, we had a little bit of a rally last week in the markets. It was a nice change of pace, certainly from a constant sell-offs that we've had for the last 4 months or so. It seemed like it was inevitable that we were going to head that way eventually, given that Japanese equities are up 23% from the lows. The Nasdaq's up over 10% from the lows. Everything's pretty much back to all-time highs, including gold now. It was inevitable that we're going to rally a little bit, but it still feels like there's not a lot of substance in the market. What have you been working on? What are you seeing? What's interesting at Architect Partners right now?
Yeah, so just a reminder for everyone, Architect Partners, we are a crypto and blockchain dedicated M&A and strategic financing advisory team. So we're 100% dedicated to the technology and anyone that uses it. And we help with M&A and capital raising activities. That's all we do. So, what are we seeing today? We're seeing a lot more quality interest in the private side of crypto and blockchain. What do I mean by that? I mean that from both the investor side. We have investors, both financial investors funds that are starting to pick up, particularly as we come into the last 4 months here of 2024. There is a lot more real interest in diving deep into high quality companies. And then on the strategic investor side, those are more companies that make investments in the companies. That is picking up as well. There was a lull, certainly during the summertime. I think some of the U.S. election uncertainties, the U.S. regulatory environment being challenged as always. It feels like we're moving from hostile to neutral, and that's giving some clarity to a lot of groups whose jobs it are to allocate serious capital and to make strategic investments.
Would you? I mean, one of the things we've been talking about those is on the margin. Anybody who's brand new who'd be thinking about coming into crypto is probably waiting till after the election at this point, right? Or are you seeing anything differently that would suggest otherwise?
Certainly, if you're brand new, you are on pause. You need some clarity there. The good news is, I think if I had to handicap the S&P 500, I'd say 75% of the S&P 500 probably already has some sort of crypto, digital asset, Web3 strategy that they've socialized internally. They've had to put that on pause and let what I've been calling the Great Purge wash out, which was the previous kind of 24 months. So the good news is we're not starting from zero, right?
Well, let's talk about that because obviously we saw a lot of that 2 years ago. Anything from Nike to Starbucks and plenty of other companies, J.P. Morgan getting involved in some way, shape, or form. But how far away are we from? I think that my vision has always been that one day every entity is going to issue a token, right? Every company will have a token that will be a third part of its capital structure next to its debt and equity. Every organization, every endowment, every municipality, every university, like everything will have a token at some point in their capital structure, simply because it's the best form of capital formation and customer bootstrapping that we've ever seen. And it just makes more sense to have more of your customers and users own a piece of your business via quasi equity through a token. It's like the old Bill Gates quote that you always overestimate what can be done in a year, but underestimate what can be done in 10. We're sitting here at what, maybe year 5 or probably 5 or 6 really, in terms of sort of where blockchain is ex Bitcoin. How far away are we from these companies starting to think about using a token in their capital structure or potentially doing some sort of token M&A?
Well, so 2030 is the date that, the year that we like to use, right? From here to 2030, I like saying 75% of what we know will be from an asset perspective will be owned digitally native on some blockchain. Um, from Is it going to be 1 year, 2 year, 3 year that we're going to start to see that? Probably not yet. I say that because we're active in M&A transactions that have a token component to it. When you go to a Web 2 or a Web 1 or a TradFi, they still do not have an ability to acquire something with a token. There is too much regulatory uncertainty. They put themselves at risk, and you have to be very, very clean from how you raise the capital perspective. And I don't think that sort of clarity has washed out yet. So
Yeah.
I think it's going to take 2, 3, 4 years before you start seeing that type of acquisitions, i.e. Traditional companies acquiring a company with a token. But I do think that once it accelerates, that velocity of innovation is going to happen a lot faster than we all expect.
Well, nobody wants to be first. Nobody wants to be last. It's always a copycat world. But some innovator or some big company that's not afraid to challenge some of the regulatory issues would probably be the first to do it. In fact, the one that's on my radar is I actually do think Coinbase eventually will issue a token for Base. And I think it'll be really interesting there from a legal standpoint, which is, well, if Coinbase 100% owns Base and they issue a token, legally the shareholders of Coinbase should, in theory, get that token airdrop to them, right, in some form of dividend, right? Very similar to, I guess it was Overstock when they, had a token dividend to their equity investors, and most of those tokens went unclaimed because nobody was set up to with a wallet to actually receive those tokens. I think Coinbase could do it. I think Coinbase could do something where they say, we're going to issue a token. Here's the initial distribution of those tokens. And a big portion of them is going to be actually owned by our shareholders. And it could be a good onboarding moment to get more equity investors to set up wallets and to think through how owning Base as a portion of their overall Coinbase investment would make sense. So I think you'll probably have to see something like that, right? A crypto native company, someone big enough like Coinbase to push that envelope. You're right. I mean, we're probably a long way away from a Netflix issuing a token, even though it makes all the sense in the world, right? A token that could basically be used as a utility token to pay, upfront for your monthly fees, and maybe a portion of Netflix's revenues actually get distributed back to token holders. You can see all kinds of ways of doing it, but I don't think it'll be a non-crypto native company that does it first. It's going to have to be somebody in the know, who isn't afraid. Maybe a boundary pusher like a Tesla or someone like that who's kind of dipped their toes in here and there. But it feels way far away from me still. But at the same time, it still makes all the sense in the world. And I wouldn't be surprised if in a year from now we're talking about 50 Web 2 companies that have a token component to their capital structure and their business model.
Yeah, I mean, what's going to drive that decision-making process is regulatory clarity. We have to have that, right? And hopefully we will see some of that occur coming off of the election. If we get that, the next piece is just adoption, right? We need more people with digital wallets walking around. We're pretty close to getting there. But those are the two biggest things that are preventing a Netflix from going, which is one of the most obvious beneficial use cases, streaming payments. I mean, if you really want to go stream based upon how much you use it. And they could totally change their business model. And you could say, hey, instead of everyone paying whatever, $17.99, you have people that stream one show and they pay $3 a month, and people that stream a lot more, maybe they pay the full $17.99. But you're going to have a lot more of that customization, a lot more of that customer engagement. And it just makes so much sense. And we couldn't do it before because you didn't have digital rails that could facilitate by the second streaming payments.
Yeah, and I think that's the biggest hangup right now. I mentioned a couple of weeks ago, you looked at that on that August 5th when the market really blew up, both in Japan as well as in the US, and a lot of brokerage accounts were frozen for a couple hours. You couldn't trade. I mean, that should have been one of the biggest onboarding events in DeFi history, except for the fact that the only thing you can trade on DeFi rails is a bunch of DeFi tokens and other protocols that most of the investing world just doesn't care about. But like, imagine if you were like, I can go trade my NVIDIA stock or my Apple stock or my bonds over on DeFi rails. It would be a huge onboarding moment. And the same thing right now is, like, we're just sort of stuck in these two worlds that don't combine. In fact, we were just talking to a distressed fund earlier today who has they were one of the bigger buyers of FTX claims. And in that process, over the last 2 years of being an FTX claim buyer, they were forced to set up wallets for stables and for Bitcoin and ETH. And now they actually are very comfortable making crypto investments just because of the fact that they got so smart on it during the FTX bankruptcy process. So you're seeing some funds who are like, okay, I'm ready to dip my toes into crypto because from an infrastructure standpoint, I'm ready. You're seeing companies, like you just said, who are not starting at zero anymore. They have teams, they have some research dedicated to crypto and sort of understand it. You have the infrastructure of crypto itself ready to go mainstream. And you have all these like separate parts of the triangle all ready to go. And what is it going to take to actually put those together and merge them and start to see real crossover usage of crypto? And I think that's the holy grail question. And as you said, it starts from regulatory for sure, but it also, like anything, it just requires some experimentation. You look back to the internet days of the early 2000s or late 90s, early 2000s, and every initial company was an internet native company, right? They would not have existed if not for the internet. But then 5, 10, 8 years later, at some point, every company became an internet company, right? Domino's Pizza was an internet company. JP Morgan was an internet company. All these companies that have been around for 50 to 100 years all of a sudden realized that the internet was a huge part of their business model and they had to incorporate it. So we're on that cusp. And I know you've done a lot of research on kind of where we are in crypto relative to that internet cycle. Like, that's what I'm looking for from you. Like, how do we get there? How does those points of the triangle merge? How close are we in terms of tracking that internet usage?
Yeah, it's value creation, right? What is going to drive participation? At the end of the day, it's return, right? Return on either return on investment, return on capital, or value created. We try to answer that same exact question, Jeff, which is how much value has crypto as an industry created? And then once we figured out that number, we said, let's compare it to something. And we chose the internet, as you allude to. And so we took the internet, went all the way back to 1994, which is when investment started happening. And we mapped its value creation, equity value creation, all the way from 94 to 2024. We did the same exercise with crypto, value created being token plus equity value. We started in 2016, which is when investment started in crypto, and we went all the way to 2024. Surprisingly or not surprisingly, the value creation graph of both internet and crypto is very, very similar. And when we think about the great boom and bust of crypto, and we'll just take our last cycle, everyone was kind of saying, "Oh man, that was such a big deal," 22 to 23. When you compare it to the 90s, the internet boom and bust of the 90s, it was 3 times less from a total amount perspective. I mean, just that shocks me because everyone made such a big deal about the crypto move lower. Another thing to note as we sit here in August 27th of 2024, for the first time since we've been tracking this, after Q2 of 2024, crypto value creation surpassed the internet's at their respective journeys. So, Jeff, we're now seeing a point where crypto is starting to generate returns. We're starting to generate real value, and we're doing it at a pace that indicates it's now being adopted faster than the internet.
And when you're measuring adoption, are you looking specifically at wallets? Are you looking at active users? Like, when you're how do you measure that? Because, for example, I was just looking at a chart before we jumped on here, talking about where the venture capital opportunities are in crypto and how you have a long way to go, simply because if you look at the consumer adoption of most crypto success stories, right? Even like your Solanas, your BNBs, et cetera, it's still at the very kind of bottom left quadrant compared to AI or enterprise or consumer, when you're talking about your WhatsApps, your Googles, your Reddits, your LinkedIn's, your ChatGPT, Microsoft Teams, Google Docs, et cetera. I mean, we're just not hitting that same level of just massive traction. So what are you looking at from an adoption
Well,
standpoint?
yeah, I mean, so this report only was value created. We were just trying to answer the question on value created. Obviously, adoption is linked to value created, but our metrics were basically how much equity has been invested, and what is current valuations for those companies, and then what is current token market cap, which again alludes to some of what you're talking about, which is why token as a structure, it can be transformative to capital markets and value creation, given how easy it is. We have a ways to go. And one thing we were looking at, which was, the token structures, like how are we doing today as an industry? Because we have this push-pull type of a moment where a lot of the returns generated in crypto have come from tokens. Which makes sense. They are issued, and investors can sell those tokens that they receive in a private investment round, on exchanges. But there is another scenario where venture capitalists have not seen the returns that they've been looking for investments in the 18, 19, 20, 21 kind of time frame because M&A just hasn't been there. So now we're seeing investors say, hey, companies, like, invest it. If you have a token component, we would invest. And so we went back and looked. We looked at stats on Crypto Rank. There are about 3,400 ICOs, initial coin offerings, IEOs, initial exchange offerings, and IDOs, initial DEX offerings. 3,400 of them. Today, 88% of those are under their initial coin listing price. 12% are over. How do you think about that from a success perspective? As Arca and you think about that type of a batting average, is that what you would expect?
Well, I think there's a couple of nuances with that, right? One is, I've been on record telling Binance and Coinbase, like, I will never invest in any token that you list based on the way your listing process works right now, because it's so flawed, right? Typically, if you do an equity capital market transaction of some sort, like an IPO, you're actually selling a piece of the company and then listing it at the same time, and thereby you're setting the price of the IPO to where investors actually want to buy it. Whereas the way these crypto tokens are being launched now, it's just the issuing company, the market makers, and the exchanges just arbitrarily throw a price out there without creating any sort of an order book, without creating any sort of demand. And as a result, they almost always, due to greed and lack of actual skin in the game, price it way too high and it goes straight down. Now, over time, it doesn't matter, because if you're a believer in, Adam Smith's invisible hand and sort of, market corrective forces, you're going to get to the right price eventually anyway. It doesn't really matter if you start at 60 or you start at 2. If it's worth 30, it's going to get to 30. The difference is, if you start at 2 and it goes to 30, you've created a lot of very happy, loyal customers and investors who made money on the way up and will become evangelists and help spread your vision and your growth. Whereas if you start at 60 and it goes to 30, you're going to have a lot of pissed off investors who leave and never come back. So while the price gets to the same place no matter what, the future success of your business is actually very influenced by how you actually list this and how you price it. So it doesn't surprise me that 88%, I think is the number you said, is trading below its price, because I think these things are all priced wrong. It does surprise me that there's very few issuing token teams and members of Coinbase and Binance and market makers who haven't figured this out yet and aren't listening to people like myself and you saying, you are doing it wrong. Stop being so greedy on the price that you're listing it at, because it is ruining the future success of your business. And I was a capital markets banker for years before becoming a trader, and then a PM, and then ultimately moving into crypto. Like, there's a lot of things that crypto does better than the traditional capital markets, but this is not one of them, right? The way bonds are priced and the way stocks are priced is a much smarter, more efficient mechanism to get to true price discovery than the way these crypto tokens are issued.
And we need to get better as an industry, because to your point, we have, and to the adoption point, you have groups that want to participate, but they're only given a set of choices. And right now it's buy it at 60, even though it goes to 30. And we need to convert those to positive experiences, a positive set of outcomes, because that is what is going to drive long-term adoption. Because then people are going to go out, to your point, you're going to have evangelists. And that is the best way our industry can get increased adoption, is have more evangelists going out and say, I had a great experience with XYZ and I generated some value. Where's the next one? And how can I participate in this? And how can I get others to adopt the technology? That's what we need as an industry.
Yeah. And I mean, ARCA is, certainly one of the longest running liquid funds. One of our strategies that we run is one of the longest running funds in a liquid strategy, and certainly in the top 50 by AUM. It's not a very great endorsement when we're saying we will not touch a new issue listed on Binance or Coinbase. If you're a venture capital investor, or you're a founding a token issue, or you're a market maker or an exchange operator, and you hear that, like, that should tell you something, right? I mean, it is just a bad, flawed process, and we want nothing to do with it until these things change. So, I've been, anytime anyone asks me, I say, if your last round was priced at X, you should list it on the exchange at 20% below X and let everyone know, yeah, we know it's going to go higher from here, but we want others to participate at the same level as our last venture investors. And, will the venture investors get upset for a few days? Sure. You just priced it 20% below where they just paid for it a year and a half ago when it was more risky, but it's going to get to that clearing level anyway, much higher, much faster, and with a lot more positive momentum and a lot more happy customers and investors if you do it that way. So why no one has tried that yet is beyond me. And maybe given how poorly some of these have performed, especially in the last 6 months, you'll start to see some changes on the new issue front in the near future.
Yeah, we need it. We certainly need it. And this is what is, hurting LPs that are investing into funds like ARCA. They look at that structure and they just say, hey, crypto is just not mature enough yet for us to participate in a major way. Maybe they actually do look at ARCA and say, I'm going to invest with Jeff because he understands the market infrastructure dynamics and the importance of it. And we need to evolve as we need to get better. But I definitely believe that, to your earlier point, there's going to be 100%, almost near 100% market participation in digital assets going forward. For the number of reasons that we've been speaking about.
For sure. Yeah, it really is just a matter of time at this point. So I think we got to get going here on time here, Elliot. What's something, parting thoughts? What's sort of the most important thing that you're working on or that you see in the market right now, that sort of dictates the next 6 to 12 months?
This is going to be we're entering what I've been calling the Great Surge, which is we're going to see market participation from new market participants that have not been here. There's going to be increased confidence in the groups that have survived the Great Purge and are really here to build. We're going to be fixing the infrastructure complications that we've been talking about today, among other things. This is going to be, this next 6 to 12 months and going forward is really going to define who we are as an industry. And we're going to prove to everyone that has been questioning our industry that we are real. We're here to stay. The people here are building real things. We're not going to get everything right, but things are improving, and we'll continue to evolve. And you're going to see some very interesting M&A transactions come down the pipe, and which I think is going to drive what we talked about, which is value creation that crypto is going to prove that we're going to deliver.
Well, great. Well, Elliot, where can people learn more about you and read some of that research you've been citing?
architectpartners.com. All of our research is there available. We do it as a service to the industry, so it is free, and we welcome you to the site and welcome to have conversations.
Well, great. Well, Elliot, I appreciate you joining. Look forward to having you back and talking about the markets again at some point. For everyone else, thank you again for joining. You can read our thoughts from ARCA at our website, ar.ca/blog. And of course, you can find me on Twitter at jdorman81. We'll be back again next week with some more market thoughts. And hopefully we're seeing some more positive momentum in the crypto markets. Thanks, everyone. And thank you, Elliot.